Okay, so this is going to be where we start the day's lesson from in our course, the complete buying and selling secrets. Now, let's take advantage of the news that is coming up by 2:30, just 1 minute to go, and see exactly what happens during the news. So now, if we had taken a position here, we use a hedge strategy, which is to buy and sell at the current price. Then wait for the news to push the price to where the profit will be made. So now, let's say we've bought at 1991 and sold at 1990. Set 20 pips stop loss each and leave TP open. Let's see which of the positions or directions will give us a profit. All right, it's time now. See the news. Okay, so the candles have started making the move, influenced by the move, and the move causes a distortion in the market that uh, leads to very quick gains. So we have first the market made a down move and then returned upward, and it's now trying to choose its direction. Then while this is happening, we are also looking at the levels we have marked to see how the market is reacting to them. Now this was a previous level we marked at 1995.75. The market reacts to it and is trying to break that level. Then down here we also have a level here at 1988. The market first came down and rejected that level. So the market is trapped by these two levels that we are going to explain in our course. And you have to see what happens, how profit is made. So, how do you know the direction the market will go at the end of the day so that you know where to hold your position for maximum profit? We're going to pay attention to this right now. Okay, so we are observing our chart. And the first thing to do when observing the chart is to know the structure of the market that is formed. And right here, there is one structure that is formed, and that is the bullish structure, which means that the market is ascending in price upward. Now, the structure has given us two levels. First level, 1986, that was broken, and second level, 1988, was also broken. And right now, we don't have a new level for today on the 1 hour time frame, and we are looking at how the market is reacting to a previous sell level that was broken before the move that came down all this way down. So this was the previous sell level that was broken, and the market is going here to engage with it. It has not been able to break it. Despite that, this is 2 minutes into the news, and we have traders who are also gathered with their positions, taking this entry or are currently in the market right now. We have those who place pending orders. They had a buy stop and they had a sell stop. Then we also had those who placed market execution orders. They just bought and sold from where I showed you initially 1991 and 1990. So now, what is the market doing at the end of the day? You can notice that the market is rejecting the previous sell level that was broken, because when that break occurred, the market moved down and made over 90 pips move. And it is expected from our rule of trading that whenever the market makes any 100 pips move, there's going to be a recovery in that move. So we will conclude that the up move we saw here was a recovery to complete the total bearish move that happened there, which we describe as an impulse. Now, if you measure that bearish move, you see the price started from 1996.62 and ended at where? Let's say 199 1975.62. Let's check it again. 1996, 1996, and to 1976. So that is approximated to over 200 pips move. And that was a complete impulse in itself that we see this move to the upside can be described as a correction recovering all the move of this impulse. That is what we train you to understand how to anticipate the direction of the market, knowing the First of all, the face and sec of the market you are trading. So we saw here that there was an impulse that met the criterion for an impulse, which is to meet a 90 pips move. And then we see here that this is a correction that has gone through to the upside. And now that impulse and its correction have both completed their move. The impulse completed this 200 pips move, and the correction also completed its recovery move. So both impulse and correction are equal. 200 pips move happening here in the previous day, which was Monday, and now 200 correction move has just happened here, which is today, Tuesday, and that was correction. So now that we have impulse completed and correction to recover all the move of the impulse, what is the next thing expected of the market? And right now there is a high impact news known as CPI. So if this is high impact news, what do we expect to happen since the impulse has been recovered by the correction? Now, looking at the levels we drew here based on our earlier observation, you'll notice that the market, in attempting to make a move upward, encountered the force, the bearish force that put it back down, and that force was created by nothing else but the previous sell level that was broken. And that sell level was also created by what we call a bearish impulse. Bearish impulse that was broken and created a sell level, and now measuring the total move we saw up here, you see that the market went straight up to test that sell level that was created in the last bearish impulse. And now, of course, that sell level was broken. After the break, we saw a structure that was formed before the next bearish impulse came in that met the criterion for 200 pips that needed to be recovered. Now, this is an important direction of the market that we are projected for a bearish. And for us here, we observed it when this structure formed. We saw the bearish candle that gave us the entry price, and then we projected it downward. That was this arrow line drawn downward. That shows that we expected the market to come down. And of course, when the level was broken, the market haven't attempted to return to retest the entry price 1988, could not make it, and so returned to break the level that was formed. And having broken the level that was formed, the market needed to struggle with what we call the turning point. And that was what created all of this move of bullish, bearish return, rejecting the turning point, then bullish, bearish, and then rejecting finally but broke it. So that turning point would have kept it at 1992.53. And that was the break that gave us all this move down here. So first thing is to understand what you see when you observe your chart, and then what is responsible for all the moves happening in the market. So right now, the pump we saw to the upside was influenced by the news, and this high expected, this move was highly anticipated to happen because there was a news before this move. And right now, the market completed that move by going to retest that level that was created. So now, how many things have we mentioned and looked at? We have a level that was created, first of all. But before the level was created, we had a bearish entry that was given, and we had projected a bearish entry, which of course went into profit as projected. So we usually project 90 pips profit, and it exceeded 90 pips because that was no ordinary move. When the level created was broken, a new impulse was formed, and that impulse was no ordinary impulse but a trend impulse. So that we call always the end of a trend, when an impulse occurs in the direction of trend and the impulse measures above 90 pips, or rather the impulse measures up to 200 pips. Then whenever such occurs, we expect that the correction will be to recover all the move of that trend impulse. Now, in the market phases and cycle, after a trend impulse has been broken and the correction move has completed, we expect a new cycle to set in. And right now, we are expecting that cycle to be a return back to the trend, which it is known by other traders as reversal. So when the market returns back into trend, while the move that corrected to recover the impulse of trend is called retracement. So this was a retracement back to point zero, level zero, and that was it. So once retracement move is complete, we expect to see market return back into trend, and that is called reversal. So now that we are seeing that the direction of the market is expected to be back into trend, and the trend we spotted here was what? Bearish. We know that the next direction of the market will be a downward direction. So this is currently happening also. Total move made after retracement or correction was complete is now up to 100 pips move. And notice that anytime the market makes a 100 pips move, know that the direction must go in that direction of the 100 pips move, because the market is not intending to go in that direction. The market will not break the 90 pips limit set, which is usually a stop loss level that we observe. So now the market has broken a 100 pip move when it got to 1986, because the high it set here is 1996. So 1996 to 1986 is up to 100 pips. Because that 100 pips was achieved, the next direction of the market is going to be bearish. So, and of course, that is also in agreement with the trend projection we have. So now we have understanding the direction of the market when the levels created give us an entry projection that is consistent with the existing direction. I always use this as an emphasis that when the task for I is done, which is interpretation, which requires that you mark your levels and you do an entry projection, if that projection is consistent with the existing direction, then you can apply your entry rules. So right now, we are looking for the first entry rule that we are going to follow after this move, because this move so far has not given us a new entry move, or has not met our entry rule for a new entry. So right now, this is just time for observing the current move and waiting for the structure for our entry rule to be set. And once that structure is set, because we have done our observation, we have also done our interpretation, and we have done our entry projection. And our entry projection, we see that there is an agreement with our slab pattern and our entry projection. That agreement also shows that there is consistency, not contradiction. There is consistency in our directional bias, because the existing direction is bearish for a trend and the correction that was completed was bullish. So after a bullish correction, what do you expect? A return back to the bearish structure of the market. And that is what is happening right now. So this is how we explain the event in the market. We explain the event by looking at the phase we are currently trading or observing, and then interpreting it with the levels and turning points we mark on our chart. Then we check for consistency or agreement of our slab pattern and our entry projection, after which also we check for how consistent our task done to find a new entry agrees with the existing direction. So for right now, we are looking at on the 1 hour time frame how that move is going to happen, when we will find a new condition that meets our criterion for entry, and that new condition is what we are waiting to see. So for that wait period, we have approximately